Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 879th edition of Short-Term Trading Live with Oscar. Traders, before we get started, as we know, futures trading can be extremely risky and can cause substantial financial loss if you do not have risk capital to lose, and if you do not recognize that you should always place stops first and that a stop is your best friend. Commodities trading is not suitable for all trading accounts, so if you do not have risk capital, please don't play this game. However, traders, rock and roll, let's go. This is the 879th video I am bringing to you. This video is being filmed for trading on Thursday, June 14, 2012. What you are looking at is the Dow Jones Industrial Average, traders, and one thing I can say about technical analysis and the 30 years I've survived in this industry is this. The cornerstone to accurate technical analysis is repetitive pattern recognition. You need to see the patterns develop and catch them before anybody else. If not, you're behind the eight ball. So this sort of analysis is something that you're all used to. Many of my OMNI fans have been around for quite some time because many of you have seen me show these repetitive patterns and have shown that that is the truth. It is the cornerstone to accurate analysis. So if that is the case, inverted head and shoulders right here, which is a bullish formation, turns out to create this wonderful spike up parallel channel which lasted for quite some time. Now we have the same situation in inverted head and shoulders. What should happen next? Well, basically this one cut right through the 200 bar moving average, spent a little time in the right shoulder, and then started to head up. Here we are now, inverted head and shoulders, blasted right through the 200 bar moving average, and should, when it's finished completing the right shoulder, head on up. That's what we're expecting. Maybe a slight pullback, see if there are some stops under here. But the likely event is that we are going to now start to work our way into this parallel channel. That's what inverted head and shoulders do. They usually show you that a market has spent enough time bottoming and now is beginning to rally. Traders, the other side of it is it's sort of very simple. It's usually a bear flag, which leads into a bear flag that does work. You get the pullback, which turns into a bull flag. If I broke this down a little further, you would recognize an inverted head and shoulders is simply a bear flag, like the one I'm drawing in for you right now. The bear flag works, you drop down, and then it turns into a bull flag. And the bull flag is usually the right shoulder. And once you have your right shoulder in place, then you have your reason to break out. It's what we call an inverted head and shoulders, but generally it's just a bear flag, which works, leading into a bull flag, which will work, and that will fill this in for us right here. So that's what usually happens with these inverted head and shoulders. Let's look around though, traders, because this is quite interesting, and I think we should look at a few more charts. Okay, traders, the Dow Jones Transportation Average. Now look at this one. The tranny had this nice inverted head and shoulders. Big rally comes off of it. Here we are now, nice inverted head and shoulders. Let's hope we get the nice rally out of it. Once again, the 200 bar moving average seems to be involved in the inverted head and shoulders. As you might note, it's not involved with the chart along here, but then it gets involved again for this inverted head and shoulders. So this should fill in just like we've seen happen back here. At least that is what you would do if you were looking to recognize repetitive patterns. Traders, you want to see another one develop right before your eyes? Short-lived, but still worked. 1, 2, 3. Short-lived, yes, but still had some merit to it. And up you went. So here we are with another one. We are day traders looking for the next move. I say the next few days it finishes the right shoulder and maybe works its way higher. Let's go look at another chart. Okay, traders, now we start to look at the chart that we like to trade more often than the others. We like the S&P, we like the NASDAQ. Here is your S&P, inverted head and shoulders. This is the daily September bar chart. You can see it held the 200 bar moving average, and this should fill in. Now, maybe you get a little bit more fill-in of the shoulder over here, and maybe you even get a little bit of a pullback and the shoulder expands, let's say. But I do not think that if anything happened here, it would just be an expansion of the shoulder, and the end result would be to fill in this parallel channel that we've drawn in now. Remember, the parallel channel is what we'd expect using repetitive patterns. We do not know if this channel will fill in, but it is what we expect that this channel will fill in. So you've seen the Dow Jones Industrial Average and you've seen the Dow Jones Transportation Average. Had a nice quick look at the emini S&P. Let's look at the NASDAQ. Traders, absolutely zero difference. The NASDAQ looks very much the same. The next move that generally happens after an inverted head and shoulders has completed itself is a rally. We simply cannot discount what we see on all of these charts. It's inverted head and shoulders holding the 200 bar moving average after inverted head and shoulders on charts around the world, especially here in the US. So we cannot deny what we see. Maybe, just maybe, we'll get a little relief from this May to September pullback that we've been in. Thank you to these inverted head and shoulders. But that's not all. Let's look at something else here. Traders, as we glance at the bonds, which should basically be building an opposite look, a bearish look, if the S&P and the tranny and the Dow and the NASDAQ are building a bullish look, then the bonds, which go opposite lately, our stock market, should be building a bearish look. It is building a head and shoulders right here. Is this shoulder going to fill in while the shoulder fills in, the bullish shoulder fills in the S&P? Will this bearish shoulder fill in the bonds and start to come off while S&P goes up? That is what should and could happen, so let's keep our eyes on this. Now, traders, it's not just here. Let me show you another interesting chart, and if this country's chart is doing better, let's face it, it must mean something. Let's go take a look. Traders, the Japanese Nikkei daily bar chart. Look at the inverted head and shoulders down there. Now, I can tell you that the 200 bar moving average has not really been involved in the Nikkei for quite some time, but here it is getting involved. And let's face it, after tsunami, the earthquake, the meltdown of their reactors, the trouble they are still having now, the jellyfish invasion that's destroying their shores and their fishing, all of that's taking place in Japan, and still the chart is showing a bullish pattern. So we cannot discount what we're seeing here. We must pay attention. Going out over the next few days, if this formation holds, it should mean the world's indices will now want to fill in that yellow parallel channel that we're looking at right here. Okay, traders, so here we are once again looking at the big picture, the Dow Jones Industrial Average Daily Bar, the first chart that we started this class with this evening. And here's what basically appears needs to be done. Remove this right shoulder for a moment, okay? Let's just move it out of the way. And let's say, okay, what the market is telling us to do basically is we are stuck in these parameters. You are a buyer down here every time you see it. When it gets back up towards the top, you get rid of it, you buy it down here again, and eventually it'll break out and show us that it wants to move towards the upside. So that's what appears needs to be done. Had you traded this portion of this inverted head and shoulders that way for many days, you would have found yourself on the winning sides of trades, just buying and selling inside of those parameters right there. So here we are now. We will do the same thing, although this almost looks ripe and ready to start making its move. So that's how I believe we should handle Thursday at least, and then we'll see what Thursday night settlement brings us for Friday. Traders, thank you so much for coming to this class and viewing this video. Please come on down to livewithoscar.com. Jump into my free trading rooms and allow me to teach you the analysis the way I view it using the OMNI methods, something that I have been perfecting for the past 30 years. Traders, always remember this. Please try and keep your emotions out of trading. One of the best things you can do to help yourselves with keeping your emotions at bay is to always place your stops first. And remember, stops are in. Emotions are out. cornerstone to technical analysis is repetitive pattern recognition. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.